let's talk about Zomato then. Just in the second half and towards the close of the trading session, we did see the numbers trickling in. A bit of a disappointment there, but what a recovery from the day's lowest point for yesterday. Even for today, Winnie, there were cuts in Zomato, but what a recovery from the day's lowest points. Tell us how are the earnings this time around and what are the brokerages saying at this point?
Shrishti, I believe what is very interesting this time is that yes, yesterday, when the numbers were announced, like you were mentioning, we saw a fall coming in, but then we saw a recovery. Today also we saw a fall coming in. Overall, the numbers were in line. Slight bit of a miss that you could say in terms of profit front, but there was an ESOP charge also this time that was there, an adjustment of 160 crores approximately. So keeping an eye on that in terms of the profitability. But overall, key con call takeaways, Blinkit turned that EBITDA positive from the month of EBITDA positive from the month of March 2024, adjusted EBITDA positive. That's what the company highlighted, and that was the key that we were watching out for in terms of a commentary there. Also, in terms of Blinkit EBIT, that came in at around 2 crores versus a loss in the previous quarter. So keeping an eye on that. They're focusing more in terms of store expansions for Blinkit. 1,000 stores is what they plan to add by FY25 end. So almost doubling in terms of their store count as well. Now, brokerages continuing to maintain their ratings, except for Avendus Spark, which is actually downgrading their the stock to an add from a previous buy rating. So still on the positive side is what the rating is, though they've raised the target price to 210. Even similarly for Jeffries, they hiked the target price to 230 rupees. UBS has maintained the target price at 250 rupees, and Bernstein hiking the target price to 230 rupees as well. Now, obviously, Bernstein is highlighting that the food delivery was in line, profitability has improved, Blinkit came in as a surprise. That's what they're keeping an eye out on. But the factor is that, we've seen that run up in Zomato in the last 1 year, almost 200% uptick in terms of the stock price for Zomato. So yes, after that 200% uptick, maybe seems like, is it priced in? That's the question that we always ask, right? That are the positives already put into place and already in the price is what we're watching out for. And that is why maybe some bit of a fall, at least, Shrishti, what we're seeing today in the stock price.
All right, that's the take coming in on Zomato. But with this, let's also listen into Zomato's management on how they're planning to increase their Blinkit stores and take on the quick commerce too.
The store count increase, like you mentioned, like a lot of our increase is now indexed to the cities which are growing. So Bangalore, Hyderabad, Mumbai, and a few other cities. So the time to break even usually varies depending on whether we are opening a store in an existing location, new location. So we expect that it will not increase meaningfully, the time to break even, but it will be higher than the 2 months that we have put in, and we are already accounting for that in our projections as well. But outside of that, I think what you will see us do more and more is just going into underpenetrated markets in the top 4 cities and opening more stores over there. I think our attempt is to keep reinvesting back into the business to grow as fast as possible, while we want to sort of maintain at least neutrality on the EBITDA side. So that's our strategy. Based on like how our expansion goes in a particular quarter, the numbers might be up and down, but it will not significantly deviate from our stated objective of remaining at least EBITDA neutral, if not positive.
All right, so that's the take coming in from Zomato's management. But with this, let's understand how is Zomato placed technically and how are the fundamental analysts looking like? Do they still find value in Zomato at this point in time? And is the stock ready for some more uptick after crossing that 200 level or not if that happens? So let's understand the dynamics at play from Kush Bohra, who is joining us on the technical side as well as on the fundamental side. We have been joined by Rajesh Agarwal, Head of Research at AUM Capital. A very good morning, gentlemen, and thank you so much for your time. Rajesh, I would like to have your take first on Zomato, because just after the earnings, there wasn't much excitement on the stock. But given their long-term targets and the kind of clarity that the management has on the growth outlook, do you believe that there's still value in Zomato? Because from that time where people were discussing about Zomato 40 rupees to a level of close to 200 rupees now, do you still find value in Zomato?
Good morning, Kush. You said it right. After that stellar run, Zomato, in the last 6 months or so, almost double. I think new investors should wait for some time. for new entry. Yes, there is some value, maybe 15% appreciation from the current market price is quite possible in the next 9 to 12 months. But still, for new buying, I would say wait for some time because of the kind of run up which we have seen in the recent past. And as far as the numbers are concerned, the numbers were pretty much in line, I would say. Revenue growth was in line. Blinkit grew well, and they have said that they are going to expand around 1,000 stores in the near future. FY revenue growth was 70% plus. And the best part was Blinkit EBITDA was positive. The management is aggressive on store expansion and all those things. The management commentary was very exciting yesterday, but still, with the kind of low margin around 2.4, 2.5%, I think all the positives has already been discounted. And I don't believe in the near future the margins are going to go up by any greater margin, I would say. Quarterly performance was good, Q-commerce done well, but reinvestment in the business is going to take place for a pretty long period of time because of store expansion and other things. And not to forget that if any marketing expenses are increased, the margins would further take some knock. So for new investment, maybe a 170, 175 levels would be a better level to invest for a longer term horizon of 220 odd rupees.
Surely keeping an eye out on those levels there, but also Kush, on the technicals, do you also believe that maybe slight bit of a run up is still left for Zomato, or what is your view now?
First up, a very good morning, guys. I would say, a slightly divergent from what Rajesh said, not by a big margin, perhaps only different, in terms of the level. If you see from a technical standpoint, the stock is actually in a rising wedge. Now, every time the stocks actually, hit the upper end of this wedge, it's corrected. Even the high that we've seen this week that the stock has made is, close to that level. But what is interesting is that the stock has a buying support in that 180 to 185 zone. Even this time around, the low was about 182. So I think, from a risk reward standpoint, from a near term standpoint, if someone wants to accumulate, I think this dip might turn out to be a good near term buying opportunity where your stop loss is firmly placed in that 180 to 185 zone. On the upside, the targets that come about are 205, and once that is taken out, you're looking at a 215 as well, which will again be the upper end of this rising wedge. So from a near-term perspective, I think this dip is a welcome one. And since the stock is very close to the support zones, I think from a near-term perspective, one even if it's a small bet, could be considered at these levels. So from the technical standpoint, at least from a near-term perspective.
Okay, that's a view on Zomato over there. But
if you like this video, then like, share and subscribe to ET Now.